When I look at the S&P 500, I see a broken chart. It's below the 50, it's below the 200-day. Technicals are a big problem as we walk into a new week with so much news. What's going to drive this, fundamentals or technicals, as we try to figure out the next leg?
Thanks for having me, guys. Yes, I think now it's mainly a story driven by technicals. So, for example, it is important to take a look what happened last week. Every week since the beginning of the war, stocks traded at a very, simple pattern. Stocks were up Monday to Wednesday every single week, and they were down Thursday and Friday by about 9% on average every week up until the last one. It just tells us that investors did not want to hold positions going into the weekend, so they wanted to de-risk portfolios. Now, last week, we saw a huge jump in stocks, but of course that happened after we got a headline saying that Iran is working with Oman to kind of, manage the Strait of Hormuz. We saw that the S&P 500 rose 3.4%. That's the best performance since late November. But it is really important, guys, to take a look at technicals and positioning. Because going into this last week, we saw that hedge funds accumulated a huge amount of short positions on the S&P 500 just to prevent themselves from bigger losses. And then when we see that stocks are moving up, they have to cover those short positions. So this is a kind of short squeeze rally. And also, again, going back to fundamentals, I want to quote data from Matt Malley. He posted a nice note yesterday. He said, when history tells us that when oil prices jumped by 60% and stay at this level for several weeks, it always leads to a decline of at least 20% in the S&P 500. So maybe we are really far from this big rally.
Well, and speaking of oil prices, we've got this OPEC meeting going on. Story in the terminal, OPEC members are planning to raise production quotas for May. This is, of course, a symbolic move as this conflict continues in the Middle East, and they're still trying to get those shipments through. We have seen a couple more go through. Iraqi oil tankers were allowed to go through today, but obviously it's not making a big enough difference. Oil prices, of course, climbing to almost $120 a barrel last month, and Brent futures are settling near $109 on Friday. That was after President Trump avowed kind of an escalation in the war, which we've also been talking about.
Yeah, triple digits for Brent, for WTI. You talk about quotas, that's different than pumping. This is a symbolic move that will not actually result in more oil, right?
Exactly. So we see these headlines again, according to people familiar with the matter, that it would lead to increase about 106,000 barrels. It's just a drop in a bucket. But also we have to keep in mind that it's not just about production, it's about supply chains and transportation. So the market is still very, very tight. And as a result, of course, consumers feel that.
Yeah, so next week we start to have a lot of data coming out. It's a double. We have CPI, we have PCE, we have Fed minutes coming out. I mean, so much is going to be coming out. What are you keeping more of a closer eye on? Is it the CPI? Is it PCE?
I would say all of the above. So, for example, when we look at CPI numbers and projections, economists expect that monthly CPI, month-over-month data, would result in a 1% increase.
And that's a big deal.
It's a huge one, yeah. So I saw data from Wells Fargo economists. They expect energy inflation is up by 11%. So, of course, yes, this is important. When it comes to the FOMC meetings, we will have to keep an eye on what the officials are saying or were saying about growth projections, because now this is a huge debate about inflation versus growth. Because when consumers have to pay more at the pump, or even if you don't have a car, right? It's a farm-to-table economy. Our grocery stores, they also deliver goods and everything, and it all depends on gasoline prices. So they will have to make choices at some point. If that happens, we will see less consumption, and of course, that is going to have a big impact on the U.S. economic growth. So we will see what the minutes disclose about what officials were saying about these growth projections.
I also want to ask, we asked this of Mike McKee yesterday, but I'm asking you as well. When we see these rallies, it seems like the market is looking for any strand of hope to hold on to. Do you think these peaks are realistic? Do you think they're aspirational? And do you think at some point they're going to stop?
You mean the stop in terms of?
Will we see the market rally anytime there's any sign of hope from the president? Anytime the president says something that the market's like, we see that immediately reflective. There doesn't seem to be any check on that because it seems like they're just looking for reasons to see hopefulness in the rally, to see an end to this conflict. Do you think that's going to continue?
I think many investors want, at least if it's not a resolution, but Goldman Sachs trading desk actually published a nice note last week. They said the market doesn't really need a very clear, doesn't need to wait for a peace deal. They need to see a signal when both sides send the same message.
Yeah.
That would be the opportunity for stock pickers, long investors or traders to start buying the dip more aggressively, and that would probably be a good, solid starting point for stocks to move higher on a more sustainable basis. For now, it's just technicals. Traders are trying to navigate the market, cover short positions, etc.
Well, you mentioned the FOMC meeting, so that's taking place later this month. Jay Powell's last time talking. I mean, how focused are people going to be on his words and what he's saying?
I think they will be focused, of course, because, it's always interesting to learn what Jay Powell is saying about the stock market. Of course, the market wants to know what's next for the next Fed chair. It's not going to be an easy job, especially right now. But again, as of now, we see data showing strong U.S. economic growth. We had good payrolls report, much better than expected. So there are no signs that the U.S. economy is in a very bad shape. So it is not an easy job for the Fed right now. And for now, most economists, they don't expect the Fed will cut anytime soon. They will keep an eye on the economic growth.
If the Strait reopens, there's an important ultimatum tomorrow night that could be critical for the way forward here for energy prices and for the markets. If there is a sign that the Strait is reopening, does that short squeeze bring the biggest rally yet?
I think we may see more short covering for sure, because it will be a positive signal for the stock market. However, I keep hearing more and more that economists, stock market strategists, they already model oil prices at around $100 per barrel up until the end of this year. I mean, no one knows for sure, but people are pretty pessimistic on energy prices. And as a result, it's going to affect positioning. And all that rally that we saw last year in economically sensitive sectors, it's not going to work right now. I'm talking about materials, industrials, etc. So what works right now is energy, AI, and of course, we are just a couple weeks away from the earnings season.